Welcome to ADT Sharda Bai Pawar, Mahila Arts Commerce Science College, Shardanagar, Baramati. Students, in bookkeeping and accountancy, we have started chapter number 1, Introduction to Bookkeeping and Accountancy. So as of now, students, we have understood what is BK, what is accountancy, what is importance of it, what are the objectives and important terms of accounting. Now, let's move on the next important question from this chapter, that is accounting concepts. So basically why we have to learn these accounting concepts, students? Because while doing the accounting or recording the transaction, some thought, some rules, some terms must be there in the mind of the accountant. So which policy, which concepts they follow while recording the transaction and doing the accountancy. So let us understand. Accounting, you already know, means communicating the result, showing the result of the whole year of the business operations, activities to various parties who are interested or connected in the business. That is the owner, the creditor means supplier, investors, banks, financial institution, government and other agency. These are the people who will be concerned with the business. So they will wish to know the financial activities and position of the business every year. So accounting means showing the information of the operation of the whole year to these parties. Hence, it is rightly called as the language of the business. So it is correctly said that accounting is a language of the business. Generally, the term accounting refers to financial accounting, means money accounting. Bookkeeping, you already know, means keeping the record in a systematic and chronological order. And accountancy is a further step of that. It means art of recording, classifying, summarizing transactions of the business concern in a very systematic manner. Now, while doing the accounting and bookkeeping, which concept must be kept in the mind by the accountant or the record keeper? So, first one is a business entity. The concept business entity says whatever the transaction which is related to the business, that only will be recorded and the accounting will be done for that transaction. So this concept shows that a business unit is a separate and distinct, means individual from the owner or the owners. Means business will be the different person from the owner who have created or started that business. That is the person who supply the capital will be known as a owner, but that owner and his business are a two different person. They will be considered two different because they are having different legal status in the market. Since owner is an artificial person and since owner is a natural person and business entity is a artificial person. According to this concept, only the business transactions are recorded in the books of account. Personal transactions of the owner or the businessman or any employee will not be recorded in the business books account. So it implies that business itself can own the asset and owes the liability by its name. So it is known as a business entity concept. Now next is money measurement. Money means transaction which can be calculated in respect of money, in terms of money. Those will be only considered for recording and accounting. So this concept implies means shows that only those transactions which can be expressed or shown in the terms of money are recorded in the books of account. Transaction which do not involve money will not be recorded in the books of account. So according to money measure concept, only money related transaction, the transaction which can be valued in terms of money, those only will be recorded in the books of account. For example, if the business has 5 computers, 2 tables, 3 chairs, the asset cannot be added to give the useful information unless They are expressed in monetary terms. For example, 5 computers for 50,000, 2 tables for 20,000, 3 chairs for 30,000. So monetary value must be there. Next is a cost concept. Cost means expense. So this concept says whenever the cost is incurred, that transaction must be recorded at the cost price. Okay? An asset is recorded in the books on the basis of the historical cost, previous past cost, that is acquisition cost, purchase cost. Acquisition means purchase cost. Cost of acquisition will be the base for all further accounting. So this cost, acquisition, purchase price will be base for all kinds of accounting to that asset. It does not mean that the asset will always be shown at the cost. According to this concept, it does not mean that that asset must be shown at the cost all the time, but the historical cost must be taken into consideration while doing the accounting of that asset. So it is recorded at the cost at the time of purchase, but it is systematically reduced in its book value by charging the depreciation. Means when the asset is purchased, it is recorded at the cost price, but its value get decreased every year because of the use of that asset, and that reduced value can be shown by charging the depreciation. For example, furniture is purchased for 3 lakhs and the same cost has been recorded in the books. Increase in case the market value goes to 1 lakh. Previously was 3 lakhs. Now it goes to 1 lakh or 1 lakh 50. It will not be considered. The cost concept says we have to consider the cost price first. Next is consistency concept. Consistency means students continuous. Whatever thing is started with the business, that should go on throughout the life of that business. So any policy adopted for accounting should be continuous or consistent throughout the business, and it need not be changed journally, and it should not be changed journally unless and until circumstances demand. However, it does not stop any improvement of the new techniques. If any improvement of new techniques is there, it is okay to accept the new things, but that should be disclosed with the proper information and note. For example, a company adopts fixed installment method for charging the depreciation on fixed asset from the beginning till the end of the estimated life of that asset. It means the policy must not be changed very frequently. So students, hope you understood these 4 concepts. Meet you in the next video very soon. Till then,